Hey everybody, Smart Silver Stacker here. Hope you're doing well. So silver has broken out of a major consolidation pattern visible on this chart. It's trading above $36 for the first time in 13 years. But how significant is that silver is trading above $36? I mean, how unusual is that? How rare is it? Well, as it turns out, it's actually pretty uncommon. In fact, silver over the entirety of the current monetary paradigm has spent less than 1 year total over $36. So what does that mean for the silver price going forward? Well, let's see what we can glean from the charts. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. So this is the monthly chart of silver. So each one of the candles that you see on the screen represents 1 month of trading. And this green line that you see on the chart is the current price level of silver, right around $36.30 at the time I am recording this video. And you'll notice that going back on the chart, you have to go all the way back to this candle, which is the candle for February 2012 to find a time when the silver price was trading above its current level. You can see that it actually started the month off and finished the month below $36, but there was a brief time in that month when the silver price rose above 36. And then prior to that, you've got to go all the way back to 2011, a year in which the silver price spent 7 months above the price where it currently is, above the $36 level. So this candle here is September. That's the month when the spot price fell below 36. But so in September, it was above 36. So that's 1, 2, 3, 4, 5, 6, 7 months between March and September of 2011 when the spot price was above 36. And then if you want to find more months when the silver price was above the current level, you have to go all the way back to the other major precious metals bull market that we have experienced under the current fiat monetary paradigm back in 1980, when it spent a very short period of time above $30. It was in January of 1980 when the silver price gapped up, and the high on this chart is 48. I believe that in intraday trading somewhere it was around $50 or very, very close to $50, but certainly above 36. And then in February, the price of silver began to decline. It actually finished the month up around $35, so below where it is now. And then in March, it briefly rallied above 36, just above 36 barely, and then it crashed all the way down to finished the month at $14. So only 3 months in 1980 when the silver price traded above $36 at all. So that is only 11 months in total that the silver price prior to right now traded above current levels. So a very short period of time. It's a very unusual thing for silver to be trading above $36. So one thing that this tells us is that with the exception of those 11 months, any time over the past several decades that you bought physical silver, that you stacked silver, for the most part, you should be in the green now. Now, I know that there's premiums and that those fluctuate and there's a few other factors at play. However, I would anticipate that at today's silver price, the vast majority of the stackers who are watching this are in the green, and probably significantly at today's prices. But leave me a comment down below to let me know if your stack is in the green at today's prices. I mean, unless you really loaded up at some time during those other 11 months, you are likely in the green. And if you did do that, then hopefully you took advantage of the downtime, the other, huge number of months. I don't know what the exact number is, but it's a lot of months. It's a lot more than 11. When the silver price was lowered to dollar cost average. But what about the silver price where it's headed now? Is there anything that we can glean from the fact that silver is above $36 now to indicate where it may be heading next? The thing about those previous breakouts is both times the silver price went above $36, it rose all the way up to 50. So I see no reason to suggest that the silver price this time around, especially considering the technical setup, I mean, if we switch to the daily, you can see what's going on here. The silver price broke above this ascending triangle. It's been consolidating ever since. I mean, it touched the trend line, touched the trend line, touched the trend line. Today, it touched the trend line again. Probably going to do it again tomorrow until we break above this line. As long as the $36 level holds, this upward trajectory is intact and this breakout remains valid. No reason to think that the silver price wouldn't rise up to 50 on this current breakout once again. And another thing about silver at 36 bucks, $36 back in 1980, it's not quite the same thing as it is today. In fact, $36 back then would be equal to about $150 today, just under that, according to the CPI, which likely understates the level of inflation significantly. So what does that tell you? Well, it tells you just how cheap silver remains at today's prices. But I just want to emphasize that it's very unusual for silver to be above $36 where it is right now. So this gives us an idea that, maybe now isn't the time to get complacent. And if you've been thinking about establishing a position in silver, there's always going to be silver to buy, but it might be at higher prices. And the fundamentals, of course, support this as well. We've got civil unrest. We've got geopolitical tensions exploding around the world. We've got a looming debt crisis that almost ensures that the dollar is going to be devalued. So why wouldn't hard assets like gold and silver be headed higher? Now, speaking of gold and silver, I also want to take a look at the gold to silver ratio chart right now, because this is flashing some signs to us as well. So we had this huge run up in the gold to silver ratio following the Liberation Day announcement of reciprocal tariffs. If you recall, the silver price absolutely tanked, crashed below 30 on that announcement. You saw this huge spike up in the gold to silver ratio because gold held up much better during that time. And this peaked around 105, which historically is very, very high. I mean, the only other time that it's risen that high in history is during the COVID crash. So this was a critical turning point for the gold and the silver markets here. And what we witnessed is, following that big run up in the gold to silver ratio, it kind of consolidated sideways here for a while, and then it broke down from that flag that it had consolidated in, and we saw it begin to tank with silver's recent rally, where silver began to outperform gold. Then we had a bit of a counter trend rally that finished up on Friday with gold's big spike as the Iran-Israel conflict broke out and geopolitical tensions drove everyone to the safest of safe bets, gold. But then it looks like that counter trend rally ended on Friday, because today we got another big breakdown in the gold to silver ratio, not because gold or silver was surging, just because gold was correcting and silver basically just was flat on the day. But I expect this ratio, which still remains very near the historical high end of the range, to continue its breakdown. This chart looks like the gold to silver ratio still has a long way to fall. The fundamentals seem to support a continued rally in the price of both gold and silver. It will be volatile, I'm sure, because of the nature of those very fundamentals that make safe havens more appealing. So we may see this ratio oscillate up and down, but at today's prices, I continue to focus on stacking silver because I do view it as the better buy, and I think that this chart confirms that viewpoint. But let me know what you think in the comments down below. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.